Welcome to Commonwealth North's online presentation of our 14th annual review of Alaska's state assets. My name is Juanetta Ayers, and I'm the Executive Director for Commonwealth North, and today I'm assisted by Aaron Weddle, who is our Program Director. Today's program, a shareholders report to Alaskans. Again, it's our 14th annual program evaluating the performance of Alaska's assets. I'm happy today to introduce our panel of speakers. We'll just do a brief introduction because we do have a lengthier program today than normal. We have 4 speakers. Commissioner Corri Feige, is the Commissioner for the Department of Natural Resources. Lucinda Mahoney is Commissioner for the Alaska Department of Revenue. Tom Boutin is the CEO and Executive Director of the Alaska Industrial Development and Export Authority. And Jim Johnsen is the President of the University of Alaska and a member of the Commonwealth North Board of Directors. I also want to take a moment today to thank Northrim Bank for sponsoring our program. Northrim Bank has been a longtime supporter of Commonwealth North and of this program in particular. As you may know, Commonwealth North is a membership organization, and we'd like to take this time to thank all of the Commonwealth North members who are online with us today. Their membership helps support the work of Commonwealth North and helps to provide the capacity to educate Alaskans, including our policy leaders, about Alaska's public policy challenges. And we'd like to invite everyone else who's not currently a member of Commonwealth North to join us as well. You'll see the information is available in the Zoom chat window for finding information about Commonwealth North membership. Our process today will be that we'll hear from the panel, and at any time that you have a question for one of our speakers, if you're online with us on Zoom, please feel free to use the chat window to send any questions. I'll roll up and start from the top down once we get to the question and answer period. So if you have a question that occurs to you, please go ahead and type it in. Please note that the chat is only to me. So there's not the capacity at this point to chat back and forth. You can only chat with me. For those of you that are calling in on your phones, you may please take note of this number. The number is 907-230-2284. Again, that's 907-230-2284. You can text any question to that number, and I'll be able to monitor those questions as well. So we'll be taking questions in both the Zoom chat and through text at that number. So we'll have question and answer at the end of the presenters' prepared comments. So as shareholders of Alaska Inc., Alaskans need to be informed about how the assets of our company, our state, are performing. During Alaska statehood, during the debate for Alaska statehood, it was recognized that our state's population was never likely to reach the critical mass to finance state government solely on the conventional means that other states use, such as taxes on individuals and businesses. So in recognition of the need for Alaska to have the means to produce our own revenue, the state was granted 104 million acres of land and mineral rights to significant acreage on federal lands. From this, it was believed that we as a state could build and sustain our economy and pay for the necessary government services through effective management of natural resources and financial resources. Today's program, our purpose is to track the performance of Alaska's assets and the performance of Alaska asset managers. And it's also an opportunity for you to review and evaluate the annual progress of our Commonwealth. To lead us in this process, I'm pleased to introduce Mead Treadwell, who is a Commonwealth North board member and also former Lieutenant Governor of our state. And again, this Mead's very experienced in doing this particular program. And so please welcome Mead Treadwell. Mead?
Juanetta, thank you. Hope everybody can hear me. I want to give a shout out just right now to Juanetta and to Aaron Weddle, who are the Commonwealth North staff who have prepared this program. And Aaron, you've done a fantastic job every year of helping to bring these statistics together. Also, just as we get started, I see that Joe Beadle is online. Joe and I have often kind of co-emceed this program. Joe, I understand you're not in Anchorage, or I hear you're down in Juneau, but thank you for helping to get this started. And I also thank you to Northrim Bank for being a continuing sponsor of this program. And also just a quick shout out to Kevin Meyer, the current Lieutenant Governor. Kevin, thanks for joining us today, and to our speakers. Looking forward to it. I think the slides are about to go up on there. We call this a shareholders report to Alaskans. This is the 14th annual review of Alaska's assets. And we look at the value, the income, and the prospects of our key assets for the preceding year. So Aaron, if you can advance to the next slide. We also try to identify emerging public policy issues related to those assets. We ask asset managers, and we've got 4 great asset managers today, to identify what criteria they should be judged on in the coming year. So Juanita, there's your first question. What criteria should they be judged on? And then we want to track the performance of those assets and assets managers against that criteria and other metrics. Next slide. Alaska, as you know, is a patchwork quilt of large amounts of different ownership. We have federal ownership, state ownership, native corporation ownership, local and private ownership that came mostly from state lands, some of it prior to statehood from homesteading or native allotments. And I think the main point here is that the founders of Commonwealth North, our first 2 governors, Governor Bill Egan and Governor Wally Hickel, believed that Alaska maybe even should have been called a Commonwealth, to quote Governor Hickel, who I heard it say this many times, and that we together as shareholders of Alaska Inc., which was a term you heard from Governor Hammond, sometimes from some of our early senators, we, the shareholders of Alaska Inc., need to look at the performance of our assets. So let's move to the next slide. Those assets I've always kind of categorized in 3 categories: natural resources available for sale, lease, or conservation. Most of the natural resources are managed in 3 resource agencies, whether it's the Department of Natural Resources, the Department of Fish and Game, or the Department of Environmental Conservation, which has some jurisdiction over quality of air and water. We have financial assets, which are basically managed in the Department of Revenue, but also in separate organizations such as the Permanent Fund and the state pension funds. And then we have enterprises intended to produce both financial return and key infrastructure for the state. And representing us today with 2 enterprise leaders, Tom Boutin at Ada, which is a state-owned investment bank, and Jim Johnsen with the University of Alaska, which is not only a huge asset, but also crucial, in my belief, to making our other assets perform. So we've got a good program today. Let's go to the next slide real fast. A very quick snapshot, and to remind you that the numbers that you're going to be seeing today are essentially the fiscal year 2019 numbers. So what we try to do is fix a point in time at the end of the fiscal year, and as you know, the fiscal year begins in July. So fiscal year 2019 ended last July 1st. At that time, the total gross state product was about $55 billion, $55.4 billion. We were growing. Our GSP had grown 2.5% from 2018. The national average was up 2.3%. We had begun a good recovery from the oil price drop of 2014. And our industries were, as you see them in the pie chart there today, they were significant. But if you take a look at those industries, Finance and real estate depends highly on some of the enterprises that we've talked about today. Transportation, government, certainly, mining, oil and gas, and education and healthcare you'll hear about today, and we've been hearing about quite a bit lately. But the point is Alaska's per capita personal income of $62,000 was up. It was 110% of the national average. And we were beginning to get back into the spot that Alaska had where we've been leading on those per capita numbers and leading on growth numbers in relation to the rest of the United States. Let's go to the next slide real fast. Our assets and our announcement essentially today is that if you figure our assets in terms of some valuation of those three kinds of assets together, Alaska's assets are up 3.2% at the end of fiscal year 2019 to a number of $73.9 billion, almost $74 billion. Each individual Alaskan share of those assets is about $101,000. Together, it's our job to make those assets perform and judge our asset managers accordingly. Let me go to the next slide now. Just in introducing Corri, I like to say, in fact, there was a very fun Washington Post article a few years ago that suggested that maybe to balance the federal budget, we ought to sell Alaska. This was before somebody else talked about buying Greenland. And I said, if you guys are selling, we're buying, and our currency will be based on coal, fisheries, gas, land, minerals, nature, oil, critters, tidelands, timber, water, wildlife, wind, and very, very valuable flyover rights. And we could probably put out a stronger currency than the currency that we're using right now. But anyway, the person in charge of managing most of those assets is Corri Feige. And Corri, thanks for joining us today. What's your report?
My pleasure. Thanks, Mead, very much. And thanks for the invitation. This is the first of these that I have had the pleasure of doing since taking the chair as a commissioner. And Aaron, can we move to my first slide, please? There we go. Parks and Recreation. Thank you. So I believe that as we look at Alaska's asset base and we contemplate asset values for the state, I think we have to recognize, and certainly within DNR, we do recognize that value takes many forms. I think that is probably best evidenced by the Division of Parks and Recreation. You can see the total budget there has been fairly static, actually down a bit over the last 4 years due to the fiscal situation of the state. But what you don't see there is that what the Division of Parks has done is they have shifted their budget from being predominantly UGF to being one that is now 60% based upon receipts. And they're very proud of the work that they've done in converting that. In years like we're experiencing now, or just over the last 2 months with the COVID shutdown, what we have seen at Parks and Recreation is that Alaskans are hunkering down outside, and we're utilizing our parks, we're utilizing our recreation areas and our trails. Over the last 2 months, we have seen record utilization numbers on the weekends in the Anchorage Bowl and in the Mat-Su. And it's not just record for the off season, it's record for entire year. So we're seeing middle of July numbers right now in our state parks. And I think that that's a pretty incredible thing. I think it demonstrates how meaningful those land assets are to the people of Alaska, and when we as Alaskans really turn to those is in times when we need to stretch out and we need to anchor ourselves and get back to our roots a bit. 2020 is the 50th anniversary of Alaska State Parks. And while we do anticipate that individual use will be up over the course of this year, we're likely to see a softer, slightly weaker year for our commercial operators, which will be impacted pretty significantly by the reduction in tour travel this year. One last thing I would leave you with Parks and Recreation and assets is we have heard loud and clear from Alaskans that the public use cabins are incredibly important, and they're one of the public's favorite aspects to Parks and Rec. And so we're taking our budget dollars and turning those around into building more of those facilities, and then ensuring that we have the staff to maintain and care for those facilities so that they're there for Alaskans as we move forward. So next slide, please, Aaron. When we look to Alaska's land base and land asset, I think this is probably front and center in most people's minds when you think about Alaska and really what drives our asset base. The strongest headwind that we face in Alaska is securing the conveyance of the land from the federal government to make Alaska whole as a state. Over the last 61 years, the federal government has conveyed cumulatively to the state that 100.6 million acres. We're still owed about 5 million acres, and mind you, these totals do not include the submerged lands acquired at statehood, which is roughly another 65 million or so. So we face significant headwinds, and we have for a number of years, and we continue to. I am encouraged that the current BLM leadership appreciates Alaska's position. I think that Director Padgett is working very hard to see what we can do to release and lift important public land orders like PLO 5150, which would bring about 1 million acres of very high priority state selections into state management. And BLM is also staring down the barrel, if you will, of the Dingle Act, which means at the end of this year, they are going to have to begin to deal with the Dingle Act, which is the Alaska Native Veterans Allotment Entitlement Program, and be able to roll those acres out and get those acres out into the hands of those veterans. So that is that's something that I know keeps Director Padgett up at night, balancing that. But I think it's an opportunity for Alaska DNR and for BLM to work together to open up more lands and get the state made whole. One thing that I do find interesting in terms of our land management and in terms of getting more lands out into Alaska's hands so that we can grow tax bases, so that we can grow business and we can diversify our economy. The Dunleavy administration has really taken a very strong position on moving the needle in terms of private land ownership, while at the same time preserving access for recreationalists, access to other multi-use managed state lands, and ensuring that as lands are brought in, that DNR can do our work quickly and efficiently and cost effectively to get that land classified, to get it subdivided, and then get it ready for sale to Alaskans so that we can build those tax bases and build that business base. Last year, DNR held extra land sales, and we intend to do that again this year. And at the same time, as we try to move more land out into that sale posture, we're always very conscious of the fact that of that 100.6 million acres that has been conveyed to the state, only roughly 50% of that has actually been surveyed by BLM. And that's a timing crunch, and that's a very high cost for them. And that's another thing that we're working very diligently with BLM on, to come up with some creative solutions around how we get that surveying done and get those lands fully conveyed and ready for the state of Alaska to then convey to Alaskans. I don't want to leave this slide without letting everybody on the line know that hot off the presses today, we have notification that the federal rulemaking on the Sturgeon v. Frost implementation, which I know is near and dear to everybody's heart on this call, that is going to hit the Federal Register on April 30th and will be open for a 60-day public comment period. I encourage all of you to go out and find that. Be sure to review that document. We will be here at the state across a number of departments, but we really want Alaskans to chime in on the importance of that kind of access and how we need to amend the regulations in federal park units so that we can reflect Alaska jurisdiction over those submerged lands. Okay. So moving on, slide 3, if you would please, Erin. Clearly, what moves the needle for Alaska in terms of our fiscal picture and the revenue is oil and gas leasing in particular, and geothermal. We're working at DNR on modernizing right now, and I'll tell you a little bit about that. A couple of key takeaways from this particular slide. You'll notice that we have between 4.5 and 5 million acres under oil and gas lease in Alaska. That's both Cook Inlet and the North Slope. Fiscal year 18 was what I would call a barn burner of a lease sale. When it came to Alaska's North Slope, that was the most robust lease sale that we had had since about 1996. We saw the highest ever per acre bid in that particular lease sale. And then in fiscal 19, last year's North Slope lease sale, state acreage was off just a little bit. A lot of the Nanoshook play type, you know, that's the willow and the Pika play type, has now been put under lease. So we really have been seeing a renaissance. You've heard a lot of people talk about the renaissance in Alaska's oil and gas and on the North Slope, and all of that is being driven by the Nanoshook topset play type. And I think in the years ahead, we're going to begin to hear more about not just the Nanoshook, but also the Torok, which is basin floor fans, which the Torok has been known for a long, long time to be a big oil reservoir on Alaska's North Slope. And I think as we're cracking the nut on the geology around these play types, we're going to see ever increasing rounds of exploration. Now, that said, we are in the COVID price slump. We are also in the COVID demand slump. And I think one thing that is going to be very important to watch as we move forward over the next couple of years and come out of this posture, and even somewhat in the nearer term, is to watch how significant Alaska's North Slope and those Nanoshook play types become to the national energy scene and to the global energy scene. Because the Nanoshook play type is shallow, it's onshore, and it's conventional, meaning it can be produced at a steady state for a very long time. And that is a far different cry from expensive, rapidly declining conventional wells, you know, like we've seen drilled in vast numbers over the last several years in basins in the lower 48. So we had begun to see that shift of interest already over the last year to 2 years as companies were looking to balance their portfolio a bit more and move away from unconventionals and back into conventionals. And that, I think, was reflected in the 2018 and the 2019 lease sales, and then most assuredly in last winter's lease sale in the NPRA, where we saw that was the biggest lease sale we've seen in probably a decade in the NPRA. I don't want to leave this without talking about the work that we're doing to modernize the geothermal licensing and leasing program in the state. I think we have finally gotten to the point where the technology for geothermal power generation exists. We're talking about small modular power generation that can be adapted, I think, pretty elegantly to communities and projects that we can marry together in Alaska. One that always comes to mind for me is the Pilgrim Hot Springs area on the Seward Peninsula. That is very near to the Graphite 1 graphite deposit, which I'll talk about in a little bit. And that can become an anchor tenant. Pilgrim Hot Springs can string together, you know, that string of pearls, if you will, with providing power to those small communities and also helping industry in that area as well. So I think we need to continue to do the work that we're doing here at DNR to modernize that program and really make it attractive and get out and actively go look for investment in that sector, because I think the time is right now, and anything we can do statewide to drive our incremental cost of power down is a very good thing all across the board. All right, Erin, next slide, please. So just quickly, a couple of things I wanted to update on North Slope activity. We had a very robust exploration season laid out. That was obviously truncated by the COVID-19 wind down, and managing COVID and COVID protection for workers on the North Slope and the remote communities across the North Slope is absolutely front and center in the mind of all of our operators. Over the course of this winter season, however, we did have some very notable exploration work done. First of all, Oil Search completed the Mitcook well, which you'll see there immediately to the east of the Pika unit. That well was a resounding success, and you can find a very nice piece written about that in Petroleum News. But that well intersected one of the thickest sections of pay that they have drilled in a Nanoshook topset to date. And so it was significant from a technical perspective as well as from a resource perspective. Then Oil Search also completed the Stirrup #1 exploration well, which was a confirmation well on the Horseshoe discovery made several years ago by Armstrong. And that is downtrend to the southwest from Pika. So that has again solidified this notion and understanding of these topset plays and the resource value within them. Likewise, if you step to the west out into federal acreage, Conoco had a very successful, although shortened, exploration season, getting a couple of the Tinmiac exploration wells on what we're now calling Willow within the Beartooth unit, and then also a couple of the Harpoon 2 wells, which is down, you'll see there to the southwest on the edge of the slide. They were able to get those wells put in before they closed down for the season. And then finally, I just want to note, you'll see the Charlie #1 well in the lower portion, kind of off to the east, southeast there in the slide. Accumulate Energy managed to get that well in and get it done just as the COVID hunker down was rolling out. And so we're pending the results on that particular well, but that too is on one of these nanoshook play type targets, now moving just farther to the east from those that have been tested to date. So, all right, next slide, Erin. All right. So I'm not going to really dig too deeply into the weeds here on this slide because I know Lucinda will talk about a lot of this. But I think the big takeaways here are that in terms of our rents and bonuses, which is the revenue generated off the leases, we've seen an uptick between fiscal 18 and fiscal 19. And I believe that obviously is directly reflected in what a great lease sale we had on the North Slope in fiscal 18. And all of that is being driven by the nanoshook play type. And you'll note here for the oil and gas royalties, these figures only represent 75% of the royalties that go to the general fund, because 25% of the royalties immediately go off the top, and as you know, into the corpus of the permanent fund. So one thing that I want to talk about, which I found interesting and notably absent from the slide deck here, and I hope to fix that for next year. I think we need to begin to pay very close attention to Alaska's mineral endowment for both critical minerals and strategic minerals like gold, zinc, copper, etc. In the geopolitical climate that we're in, and I think with COVID and with trade tensions and so forth, we're going to see the importance of Alaska's mineral endowment grow substantially, I believe, over the course of the next several years. And I think that comes from a growing recognition that we need to have stable, safe U.S. production of things like critical minerals and rare earth minerals, on which we currently rely in excess of 90% on places like China. That's going to mean that in that mineral sector, we have to be able to move forward with things like the Ambler Road. The Ambler Road project, which is a transportation and a NILCA transportation corridor that currently just, we have the final EIS issued on that now, and Tom may talk about that as well. It's an ADA sponsored program, but that will open up the Ambler Mining District, which has 10 strategic mineral deposits, one of which, the Bornite deposit, holds a significant endowment in cobalt. We will see things like expanded rare earth exploration, because Alaska is home to no less than 70 rare earth occurrences that are known. They're not widely mapped or understood, so a lot of the work that DNR will be doing in the field and in conjunction with the USGS through programs like Earth MRI over the next several years will be focused on learning more about those accumulations and making that data publicly available. On the critical minerals side, Alaska is home to 32 of the 35 critical minerals. We only lack aluminum, helium, and potassium, which are not conducive or permissive in Alaska's geology. So I mentioned before Graphite 1, and I mention it here because it's probably the highest up in the queue. That is a world-class graphite deposit, large flake graphite deposit, just outside of Nome. And Graphite 1, when that project comes online, will be able to supply the sum total of the U.S. demand for graphite for greater than 40 years. So we need to be looking strategically at our mineral endowment, and we need to be looking strategically at how that mineral endowment and how the expansion of our key anchor mines and new mines that will be coming online in the next several years play into our global significance and certainly to our national security significance. And I think from a policy perspective, that's a really compelling discussion to have. And so with that, I will turn it back to you, Mead.
Corri, thanks. And thanks for a wonderful presentation. Before you go and before I just bring Lucinda on, take a look at that general fund revenues number, $2 billion. I think we'll be looking at a revenue estimate. Lucinda, that's kind of a question to think about. The unrestricted non-petroleum revenue, as you can see, petroleum revenue is about 5 times or 4 times what we get there. Also take a look at the corporate income tax. We had a big jump between 18 and 19. That's going to be very interesting to watch with what's been a very tough year. So with that, Lucinda, this is your first time at Commonwealth North as Revenue Commissioner. Corri, it was fantastic to have you. And let's talk about our financial assets.
Thank you, Mead. It's great to be here. So I'm going to provide an overview of 3 important financial assets and asset-related type topics. And the first one is our updated revenue forecast. The second will be our financial assets and our reserves. And then third, I'm just going to provide a really high level of discussion of the $1.5 billion funding that we just received from the federal government for the CARES Act. So what I've done is I've selected a few slides from 2 pretty detailed documents that were passed along to Commonwealth North. So folks who are listening, if you want to download them, you can. And I just want to point out the 2 documents are the spring revenue forecast, and it's a detailed presentation that documents all of our assumptions and all of the different revenue categories and the changes in the forecasts. It was last updated April 6th. And the other document is an update on the state's investment funds. And this is also very informative as it provides an extreme amount of detail about most of our larger funds, the investment portfolios in terms of how they're managed, the returns, and the historical balances. So looking at the revenue, the UGF unrestricted revenue outlook, as you know, the state's economic research group does a revenue forecast in the fall, and then they do an update in the spring. And this spring, this forecast was developed in a period of extreme uncertainty, April 6th. And as we know, the markets were in a turmoil. The pandemic had closed down most of our economy, and the crude price was extremely volatile. And so the very first box, as you can see, is our forecast of ANS oil price. And so as you can see, for the rest of 2020, we reduced the annual average price from $63 down to $51, and then continued to make reductions into the future. And this price is based on the futures market and reflects the current supply, storage, and demand imbalances. However, just as soon, of course, as the ink is dry on documents like this, the environment changes significantly, and just a week and a half later, some of our crude prices were negative. So when we look at the futures now, it's likely that some of these revenue forecasts are optimistic, unfortunately. Additionally, we did make some reductions to our non-petroleum revenues due to the economic impact that the COVID pandemic was anticipated to have on our economies. And so those were incorporated in these numbers as well. So the impact of the changes to the UGF is a reduction of $527 million for this fiscal year and $814 million for 21, which is a combined $1.3 billion just over the next 14 months. The next slide depicts the volatility that we have been experiencing in the oil price since 2016. And I'm sure most of you in the room understand how difficult it is to forecast the crude oil price, but hopefully you have an appreciation for how difficult it would be in this environment. The dark solid line is the actual Brent price. The dark dashed line is what we forecast in the 2019 fall forecast. And then the dotted line is our spring forecast. So you can see you can see the difference and the variations in terms of the different analysts in terms of forecasting. The next slide provides a visual of the impact that price has on revenues. And the point where the dashed lines intersect represents our UGF revenue forecast for 2021 of 1.1 billion. And this is using a price forecast of $37 a barrel. You can see that as the price decreases, the revenues do as well. And so if you want to extrapolate down to maybe the $20 to $30 range, you can get a pretty good indicator as to where our revenues may land. Numerically, a $1 price change results in about a $25 million change in our revenues. So as our revenues fall unexpectedly, like they have over the past months, our financial assets and our reserves become extremely important as they provide our cushion when our expenses exceed our revenues. So you can move to the next slide because I'm going to now start talking about our reserves. But it's really important to note, and most importantly, that these investment funds and the income that is generated from them now funds the majority of, or about the majority of our budget. So what we've done is I've provided some very detailed information about some of our larger funds. And, but I just want to point out that in total, the state manages investment organizations and funds about to a tune of $100 billion. And so this is very significant. And I feel like we should be very fortunate that we have this much money that we can use to generate revenue to fund general government. So the first slide here is the Constitutional Budget Reserve. And the CBR is our primary source of liquidity to fund our cash deficits, our budgets, and our budget's shortfalls. It's funded by the deposits resulting from oil and gas or mineral settlements, mostly relating to taxes and royalties. And what you see on this chart depicts three primary categories. The investment objective, because each of our funds may have different objectives depending on the amount of risk that we want to take and the amount of return. So this particular one, because it's more about liquidity, the asset allocation is more towards the cash. And so you can see in the pie chart, cash equivalence is 75%. The market value component of the slide reflects the market value of this particular fund over the past 4 years. And at the end of March of this year, the value was $2.2 billion. And then immediately below that represent the returns, or if you will, the return on our assets. And moving on to the next slide is, whoops, we want to go back one. There we go, is the Alaska, the permanent fund slide. And here the source of this fund is the oil and gas royalty deposits, the 25% that Corri was referring to earlier. Actually, she was referring to 75%, but 25% or so goes into the permanent fund. Also, deposits are made into it to inflation proof it, and then there's potentially other legislative appropriations. But here, when you look at the investment objective, you'll notice it is different than the CBR. It's higher risk and it's a longer term investment horizon. So it's more diversified. And the value as of the permanent fund as of yesterday is $63.3 billion. And our fiscal year return is a minus 1.2%. And so considering all of the volatility that's going on in the market, I don't think that's too bad. The calendar year to date return is a minus 6%. But what's really important to note about the Alaska Permanent Fund is a portion of the $63 billion is dedicated as the earnings reserve account. And this is the spendable portion of the permanent fund. And as of March 30th, the uncommitted portion of the ERA was $8.5 billion. And so the $8.5 billion can then be used to pay dividends and to fund general government. And one of the SB 21, I believe it was, established that 5.25% of the ERA could then be used to fund the dividends and to inflation-proof the fund. So it's of note that in 2020, 2.9 billion of the ERA was transferred to general government to fund general government operations, as well as the permanent fund dividend. And in 2021, the number is 3.1 billion. So we can see that as our petroleum revenues are decreasing, the revenues from our investment income are increasing and becoming more and more important. Moving to the next slide, it provides a snapshot of the funds that support the retirement and health payments for the PERS and TERS retirees. There are actually 14 different funds that we manage for these retirement and pension programs. And what I'm providing you information on here is for 4 of the funds, which is PERS and TERS, and it includes both the pension and the health programs. For these 4 funds, the total that we manage is just under $24 billion. And in regard to the PERS percent of funded statistic, from the pension perspective, 76% of that is funded. And for TERS, 84% is considered to be funded. And health is fully funded. The health component is fully funded for both of the funds. Moving on to the next slide, this provides a summary on the very first line there of the assets that are managed by the Treasury Department, and that's the $8.1 billion. And so for this category of assets, this is where the Revenue Commissioner has full fiduciary control over these assets and these investments. There's 24 different funds that are managed, with the largest being the Jafonzi Fund of $2.5 billion. Then we have other funds that are larger, like the Power Cost Equalization Fund, the Higher Education Fund, and the School Trust Fund. And we have a treasury group that works in the Department of Revenue that focuses on managing these funds. And the bottom line is $387 million of investment income that was generated from those funds. And so that equates to just under a 5% return. So the last slide that I have here is just a summary in regard to what has been allocated to the state of Alaska from the federal government in regard to supporting COVID-related expenses. And to date, the total amount that we have received an allocation for is $1.5 billion. And in regard to getting that money into the communities where it's needed, what will happen is some of the funds will flow directly to some of the community recipients from the federal government. Some of the funds will actually flow through the state with existing appropriations. And then there are some funds that will have to be appropriated by the legislature, and that process is happening as we speak. So to the right, you can see that $562 million has been dedicated to be allocated to local communities. 300 million is dedicated to help fund small businesses. I mean, this is a time where small businesses really need our help. And so this money is intended to really help them get going again. 337 million is dedicated to corona-related healthcare costs. And then 50 million to help our nonprofits, mostly to help support the basic human services component of the nonprofits, the soup kitchens, the food banks, the homeless shelters. And there's a lot more detail available in regard to this on the governor's webpage. But in closing, you know, I've gone through our assets very quickly. And as I mentioned earlier, I feel fortunate that we do have $100 billion in financial assets to help us fund retirement and to, you know, have a savings plan for the future and to help us navigate through these currently challenging times.
Lucinda, thank you very much. And it's a wonderful report. We have a couple of slides that are a little bit repetitive of what you've just seen, so I'm not going to dwell on the constitutional budget reserve except to say that the challenge of that plus the unallocated permanent fund earnings that were mentioned are certainly a significant issue in Juneau. I heard a briefing on that the other day from legislators, so not sure when they're going back, but it's a big discussion. Let's go to the next slide real fast. You've got the Permanent Fund Corporation, and again, we have the numbers just through FY19. There's an update in the previous slides where you had net assets of $66 billion and at that point a 6.32% return. You heard some lesser return numbers just now from the Revenue Commissioner. Let's go to the next slide. We always like to put this slide up because it shows where Alaska is in the range of other global sovereign wealth funds. Commonwealth North Board got a briefing the other day from somebody, an expert who was urging us to think more about Norway. And Norway and Alaska have produced about the same amount of oil over about the same amount of time. Their fund is not necessarily performing better, but they put more in the fund and have higher taxes than we do. So that's kind of the answer there. And I think we're going to try for next year to see where we perform among these 26 because the Alaska Permanent Fund has had a pretty good return all told. Let's go to the next slide and just say we didn't talk about the Mental Health Trust Authority. That's been playing a very important role during the COVID-19 response, and its rent and royalty income and investment income is not as large in 2019 as it had been in 2018, but still a very important asset for the state. And now what I'd like to do, let's go to the next slide. We're going to turn the mic over to Tom Boutin, who's head of the Alaska Industrial Development and Export Authority. And Tom, we had described you as an enterprise of the state. You are an enterprise of the state, and you also are a major financial asset of the state. We included you among the assets, but take it away. We're looking forward to your presentation.
Yeah, thanks, Mead. Tom Boutin, ADA, and I'll talk first about the numbers and the numbers that you have, which because of technology I don't have. I just have a hard copy in front of me, but you do have a display of net position, operating revenue, operating expense, et cetera, from FY13 to FY19. And so I'll talk a little bit about the ADA numbers, what they show and what they actually don't show. And then I'll talk about where ADA is now and then a little bit touch upon what our outlook is right now as we see it in current conditions. The ADA financial information needs to and does conform to GASB, and maybe for that reason, maybe that's the reason that it can be misunderstood. It certainly was the case there for a while in 2019. Ada isn't directed at all in statute or in any other way to have a financial return. Instead, Ada is directed by statute to entirely aim at jobs and economic development, and that really, therefore, is to the exclusion of financial results, even though Ada does depend entirely on its own financial results to fund all of its operations. Ada hasn't had a state appropriation for its general operations since 1986, and it is also, it's paid over $420 million to the state general fund in the form of dividends, even though the statutory direction, as I said, is entirely on jobs and economic development. Even the prudent investor rule isn't stated forthrightly for Ada. So anyway, in focusing on jobs, and your information doesn't show that Ada jobs created were 1,359 permanent jobs and 415 construction jobs in fiscal year 2019. In addition, the metrics that aren't shown also are that one of our programs, a so-called conduit revenue bond program, passed the $1.5 billion mark in total financings in 2019. And then since the end of fiscal year 2019, the Ada board has authorized another $300 million of financings, mostly healthcare financings, since that time. And of course, none of those numbers, the jobs or the conduit revenue bond program, would show up or do show up in any return on investment calculation. There's nothing wrong with government choosing goals and objectives that conflict with financial return as long as everybody recognizes it. For example, the $125 million energy system loan that Ada carries on its books and is included in those numbers you have for the interior gas utility, the statutory direction for that loan is that the specified interest rate is 0 for the first 15 years, and then for the balance of the loan term, it's 0.25%. So a return on investment on that would show that a certain distortion if we compared the return on investment with returns for another state agency or even the CBR or something like that. The Ketchikan shipyard is an example then of how the assets on our balance sheet need interpretation at all as well. We carry the Ketchikan shipyard on our books for $67 million, but if we had to sell it, especially with the goals and direction of jobs attached to it, then a sales price would be a pretty small number. But at the same time, the original investment was had a lot of federal funds in it, and the material portion of the support comes not just from Ada, but from the municipalities in Ketchikan, both with the forbearance of property taxes and also relief on electrical power. The Snettisham Hydro project here in Juneau is another example of how our balance sheet needs interpretation. We carry Snettisham on our books at $56 million, but at the final maturity of the debt, the local light company can buy Snettisham from Ada for $1. So our balance sheet has to, have that interpretation. The Skagway Ore Terminal is another example. The lease that we have with the borough for the land that the ore terminal sits on expires in 2023. And up until about 8 or 10 weeks ago, anyone would have bet that the borough wouldn't want to renew that lease, perhaps, because it sits right in the middle of town where the cruise ships are, of course. But maybe now anyone looking at it would wonder if diversification isn't a good idea for any municipality. So who knows? Ada now continues to have its ongoing loan programs and loan guarantee programs, including a new guarantee program we have come up with and begun just now for this COVID situation. And the very first loan guarantee went to Blood Bank of Alaska, by the way. We're doing loan modifications every day. And that trend only began in the latter part of the first quarter of this calendar year, of course. Some of those modifications are pretty simple and really quite routine, and frankly, they're agreed to on a very routine basis. And some are not so simple, as you might understand. And the ADA board, therefore, is monitoring our cash position, and our cash flow forecasts are updated at least weekly. And I would say that ADA is headed into a time when, for the first time in my experience, and I was on the ADA board for a total of 13 years over the decades, and I would say that use of ADA cash will become a prioritization kind of exercise within the next 18 months, if not sooner. I also want to say that looking ahead, while that conduit revenue bond program I mentioned that hit the $1.5 billion mark in fiscal year 2019 has a standalone credit feature. And other ADA programs over the years have relied upon and have used public finance capital markets, and the credit ratings that those programs look to experienced a very severe credit rating downgrade in 2019, and those credit ratings are in a rebuilding status, if you will, and now clearly the timing for trying to begin rebuilding the credit ratings couldn't have been worse. There was mention a few minutes ago of Ambler, and indeed on March 27, the BLM's EIS that ADA was funding, and funding something the federal government has in a public process is sure a way to spend money. That came out on March 27. We got the word yesterday that the record of decision, which will include the 404 water permit, is now delayed, and I'm so far unable to find out the nature of that delay, and we may need some tall guy there and above us in state government to make a call if it comes to it. But now we're thinking mid-May will be the record of decision and the 404 water permit. We do have a field season that we're going to jointly fund with one exploration company for 2020 and for 2021. Certainly, there are always potentials for delay, but really the public process waypoints are behind us on Ambler, and I happen to have been on the board and helped with the Red Dog financing years ago, and the Red Dog model applies very, very well, as near as I can see and anyone can see, to Ambler. And it hasn't happened in the last month or so, but up until a month or so ago, I have to say Ambler was unique in my experience in that while we were we're thinking about, of course, toll-backed revenue bonds to fund the road construction. People unsolicited, real firms were calling from time to time, inquiring if what might be an opportunity for them to invest in Ambler. So it's not necessarily the case that we'll be doing going a public finance route, but then again, capital markets have sure been shaken up the last several weeks, and so we'll see when we come out of this how that looks. I'll just finally say, of course, as we know, commercial and investment banks seem to be jammed up, making statements against Arctic energy development, and it seems more likely that we'll see additional banks pile on than, we'll see perhaps some of these banks begin to walk back on those statements. And so, ADA's access to capital markets, notwithstanding that credit rating downgrade, which I mentioned a moment ago, probably is more important than ever, in my estimation. And so with that, I'd be tickled to death to answer any questions about ADA or about the financial markets that ADA might need to use for Alaskans or any other aspect.
Tom, thank you. And we do have collections. Just to remind folks a couple things. First off, if you have a question, use the chat portion on your Zoom, and that will send a question to Juanetta. It's a little bit after the 1 o'clock hour. This program always goes an hour and a half, and our next speaker will be Jim Johnsen. I'll introduce in just a moment, but we do hope to have some time at the end for questions. And Tom, thanks very much for your presentation. I'm going to quickly go through just a few of the other enterprises to give you a snapshot. Before, Aaron, before you leave ADA, go back to that. Just look, the net position of assets of ADA is about 1.3 billion. Next slide, we go to the Housing Authority. The net asset position is about 1.5 billion. This is backing housing in the state, and the dividend of the state is about $45 million. A little bit higher in terms of returns, but it's not a commentary on ADA. It's just it's a different kind of asset. Next slide here, you can see that the net position of AHFC has been coming up in recent years, and we don't have the trend going back before FY12 on this slide, but we did very, very well in the housing crisis of 2008, 2009, because Alaska Housing has such a large position in the housing market here in Alaska. And this is going to be an interesting one to watch with the economy right now, and the BP sale to Hillcorp and some of the other things that may change the housing market. We'll see what's happened, but so far the housing market seems to have been standing up in this year by some of the reports I've read. Our next set of enterprises are the enterprises that are direct. And you've heard a lot about the Alaska Marine Highway. Commonwealth North board member Tom Barrett has been working on the Marine Highway restructuring committee asked by the governor, and we may hear from him later in the year. Let's go to the Marine Highway for a second. And this has been the challenge. Your net income for this very, very essential service has been about $90 million negative every year. The question is, where do we go from here? And I think that I'm just going to say that's more to come for now. Let's go to the Alaska Energy Authority. The board of ADA oversees the Alaska Energy Authority, or I guess it's fair to say they have a common board. Their net position is way down from FY18. I'm not sure I can explain that. Tom, if you're still on the line, is there something that we shouldn't be missing there?
Well, the most dramatic change for the Energy Authority, and it'd be much more proper for us to talk to Curtis there, of course, but the fall off in or interruption, let's say, of the Susitna-Watana project did make dramatic changes to the Energy Authority. I don't have that slide in front of me. I'm afraid I'm technologically challenged here working from home, but so I don't have that particular slide, but that was a dramatic change in the financial statements of the Energy Authority was, and I will say, of course, the Ambler project was also put in coal storage by the previous administration, and only cranked up again just as soon as Governor Dunleavy was sworn in. So Susitna-Watana wasn't the only thing shoved aside.
Got it. I'm going to move quickly to the Alaska Railroad Corporation. As you know, with tourism revenue, that's going to be a challenge this year. Last year, the railroad was doing actually much better than it had been the year before, and a better trend, a significantly higher trend over a 5-year period. We're going to have to watch that one very carefully. The next slide is the international airport system. And as you know, we have the state owns in the international airport system both Fairbanks and Anchorage together. The net asset position has gone up. Operating revenue is down slightly in FY19. Operating expense came down some, but it still had a loss of about $13 million. And that's going to be very interesting to see this year. I just saw some recent statistics that showed landings at Anchorage were holding fairly steady for the cargo markets, obviously not steady for the passenger market. So we'll be watching this one closely over the next year. I'm going to go now to the University of Alaska and ask Jim Johnsen, who has been on our podium regularly and is a member of the board of Commonwealth North. Jim, thanks very much for joining us today, and the floor is yours. Jim, you need to unmute if you're not.
There we go. Thank you. I should, because I've been doing about a dozen or so Zoom calls a day these days, I should know where that button is. So thank you, Mead. Appreciate it. And thanks for the opportunity to share what's going on at your university. I want to think that you're putting me last in the presentation as a reflection of the highest level of importance of this particular asset, the education of our people. Which, as you suggested earlier, Mead, does drive everything else that happens economically in our state. You know, our mission since 1915, when we were founded as a land-grant university by Congress, really focuses on discovery or research, learning or education, and then service or outreach to communities in the state. And you'll see some of that important mission reflected in the presentation today. The university is a single legal and financial entity. And so we do think of ourselves as the statute reflects, as the University of Alaska. Our structure, though, is in our university are 3 separately accredited universities and 13 community colleges that are part of each one of those 3 universities. And then we have the statewide organization, which provides governance and shared, non-duplicated services, administrative services. UAA accounts for about 39% of our state funding. UAF 53%. It's higher largely because of the high concentration of research that happens at UAF. Also, debt that UAF has borne in order to finish up various buildings that haven't been completely funded by the state over the years. UAS about 4% and statewide about 4%, even if you include transfer payments for things like insurance premiums and network costs. Statewide comes in about 3.5% UGF if you exclude those transfer payments. Our budget context, it's been rough since FY14 through 22. Our UGF, or undesignated general fund, has been cut by 32%, a cumulative cut of 490 million. And that sounds like bad news, but it's actually really, really good news compared to last year, because last year we narrowly averted a budget cut that would have resulted in 49% state funding cut between FY14 and FY20. So that actually is good news, though that does not include the roughly $35 million in estimated COVID impacts, direct cost impacts, and also projections in terms of reduced revenue in the future. I would note this year is the first year in my time in Alaska when the UGF budget for corrections exceeds the UGF budget for the University of Alaska. In response to these cuts, we've already over the last several years cut about 40 programs, and there are about 47 programs on the docket right now this spring for the Board of Regents to reduce or discontinue. In terms of job loss, and these are people, so payroll numbers to payroll numbers from FY14 to the current, it's about 1,700 people are no longer working at the university who were working here back in 2014. And just today, I announced a furlough or pay cut for 166 executives across the university system. And I anticipate going forward in the coming year to a large number of layoffs. So to this table here, I think net capital assets has stayed pretty steady, increasing back in the 14-15 time period, but stayed pretty steady here over the recent years, as have endowment investments. Those, we saw a dip there in 16, but they've come up, and we're pleased with those investments. A land grant endowment and other assets pretty steady. As Commissioner Feige talked about, we as Alaskans have many outstanding land conveyance issues, and since 1915, when we were due about 500,000 acres from the federal government as a land grant university, over that 103-year period, we've received about 110,000. It's a long and sordid history with things like pandemics and depressions and world wars getting in the way. And in fact, actually the Statehood Act, along with some Supreme Court decisions by our state, have gotten in the way. We're working hard on that. I would hope that if we get our rightful land grant, which would add about 360,000 acres to our land grant, and we get those monetized, then we would see a substantial increase in the numbers reported here. That won't be for some years, needless to say, because it does take time to get that done. I'm pleased with the support we received from the governor's office and also the congressional delegation. We're very close to having a draft bill ready to go for submission in the United States Senate. As you see, our investment endowment returns here have been certainly positive. I don't believe that the number next year will be as positive as you see here from FY19. The next slide, please. So these are challenging numbers here. Of course, the first number here in terms of our students, we have been losing enrollment continuously since 2011. And we think that tracks the decline since then in high school graduates in Alaska. It also tracks recent population loss in the state. Since 2014, it certainly tracks budget cuts that we've experienced since that time. Degrees awarded also on the downside, and I think this is a function of headcount, but I think it's also a function of the much longer time to degree that Alaskans tend to take than is the case in other states. And so you'll see that decline, and it will likely continue. High school college concurrent enrollment headcount really jumped in 15, 16, up to 16 and 17, and that's because of the real push for middle college high schools across the state, being led at that time by UAA and Matsu College, and they've continued to step that up. And I think in this coming fall, you'll see some more positive numbers, I believe. Fairbanks is starting a middle college high school physical facility on its campus. In addition to that, it's created a virtual middle college high school, and over 30 school districts in the state now have at least one student, college-ready student, who are studying online with the University of Alaska. This has been a major push, and I hope that by investing in this area, we can also make improvements in the recruiting that you see reported in the first row of this chart. Tuition and fees, despite our high costs, cost of living in Alaska, of course, is high. We've maintained tuition and fees at below the Western states average. And that incorporates even the tuition increase that is planned for this fall. So I think we're doing our best through tuition to maintain affordability and access for Alaskans to the opportunities that we provide to our people. Research, of course, is a success story here. About $25 million a year of UGF goes into our research enterprise, and it generates north of 150 million. I think this will continue to be strong going forward, although there may be some slowdown in some of the work, of course, because of the COVID crisis and the inability, for a while anyway, of our researchers to get out into the field and perform on those research grants and contracts and into their labs. Do appreciate the governor's provision of an exception to allow our researchers to get into their labs and keep their work going. In terms of employees, and this includes faculty and staff, the full-time, you see the numbers from FY 12-13, so significant decline. And then when you add it all up, particularly including part-timers, you can see the dramatic reduction in the number of people employed at the University of Alaska. And I believe this number will even go down further in response to both the state funding cuts and the COVID impact that we're experiencing now. Looking forward, trying to be a little bit optimistic here, in addition to those financial assets and people assets that the university has, the Board of Regents has a very strong vision for the university out to 2040. And we believe that's a good time frame, because a kid born today will be, hopefully, if they stay on track, at the University of Alaska in 2040. So never too late to plan for a really inspirational and ambitious future for the state. And the board has 2025 goals as well. And those are explicit in support of economic development, in support of workforce development, research, educational attainment, and doing so cost effectively. Part of that too is philanthropy. The university has stepped up pretty aggressively its work in fundraising in the private sector and done very well. And that'll continue to be a priority in the coming years. And I'd be happy to report on that with more specificity if Commonwealth North would be interested in that in the future. I think, you know, the university has demonstrated a few things over the last several years. One is its ability to slim down and to cut, painful though that process has been and will continue to be. The second thing, I think, is our agility. We often don't think of the university as being particularly agile, but when you think about moving from largely in-person delivery of classes in one single week to exclusively online education, I think that demonstrates a tremendous amount of agility among our faculty and our staff and our students all across the state. And we've provided tremendous resources so that our people can learn and work and teach from home. Very impressive. I think we've also made tremendous contributions to the state, and we're pleased to be able to work with communities and the governor and his team. We've provided huge numbers of PPE in response to the COVID pandemic. We are manufacturing PPE in our labs and facilities across the state. We've expedited graduation for our nursing graduates so they can get into the fight quickly. Our epidemiologists are working with the state epi team. Our economists, especially those there at ICER in Anchorage, UAA, are working on thinking about recovery and how we build out of this pandemic. So we are facing pretty serious headwinds. Our poor economy is certainly a challenge. State funding cuts, the COVID impacts, again, which we anticipate to be about $35 million on top of the state funding cuts, will definitely impair this important asset's ability to continue leading the state forward. That said, our board is laser focused on reductions in the short term with an eye toward the long term. You know, the folks who founded the university back in the last century, early on in it, and have supported it over the years, had a long-term view. And that's exactly the kind of view that our board is taking, and that I think we all need to take as Alaskans. So thank you all for the attention and the continued encouragement of support for higher education in our state. Thank you.
Jim, thank you very much, and thank you for all of the contributions. I want to sum up very quickly so that some questions can be asked. This list here of issues and prospects we put up every year, and in terms of our natural assets, you heard Corri speak about a number of very exciting things that are still going on despite the low prices. On the financial assets, we heard some issues and some, we expect some continued arguments. Commonwealth North has a fiscal study group which is looking at revenue sources for the state of Alaska, and I urge you to be involved. And then finally, with the enterprise assets, we heard that there's some changes going forward in terms of the roads, question about the ferry boats, and we heard a very good report from the university. Jim, I really have to commend you. I tell you, the presentation was very positive, but I want to see us spend more on universities than we do on corrections. We got to figure that one out real soon. With that, I'm going to turn back to Juanetta, who's been collecting questions, and we've got the panel here, and let's go from there. And thank you very much for having me join you today. But Juanetta, go ahead.
Great, thanks, Mead. Thanks to all the panelists. I'm going to start with a question. We had several that were kind of focused on the issue of the large banks redlining investment in the Arctic, focusing on what should we do about that, and are the efforts of Senator Sullivan in terms of focusing on those decisions as being discriminatory, will that effort have any effect on those institutions? So both a resource and a financial markets question. And Commissioner Feige, you want to start?
Sure, thank you very much, Juanetta, and great question. And it's one that is front and center in my mind as well. I happened to be on a call last Friday with Senator Sullivan and the Secretary of Energy and many of the producers and members of AOGA here in Alaska. And the Senator was very, very clear that that is behavior that is absolutely unacceptable. And when Goldman Sachs, which I believe was one of the first banks to take that posture, several months ago, when they made that announcement, Governor Dunleavy and Department of Revenue and DNR reached out to Goldman Sachs and had a conversation with those folks about what they're looking for and what their stated purpose in stepping away from oil and gas development in the Arctic. And for the US, that means only Alaska, nobody else, just us. And what they're looking for under their stated principles is that they want to see economic self-determination and sustainable communities. And when you actually look at, and we pointed this out to them and invited them to come here and put boots on the ground, I will take them to the North Slope. We'll go to Barrow. We'll go to Atkasuk. We'll go to any of our remote communities. which actually enjoy a certain level of economic self-determination and sustainability simply because of oil and gas development in Alaska's Arctic. So I think that Senator Sullivan is going to continue to press on that issue and has certainly now even raised that issue with the president regarding COVID funds. And if we have an institution that is going to be benefiting from the loan programs and wheeling some of those COVID relief funds, they should be excluded from qualification for those programs if they have taken a posture of discriminating against Alaska and the Arctic.
Great, thanks. Tom, any thoughts from you on that in terms of financial markets or consequences for those institutions?
Well, yes, and thank you very much thanks for the question. First of all, it's very good that Senator Sullivan has drawn attention to this. And I will say too that Citibank, Wells Fargo, Goldman, and those others, we can access the capital markets without their work as underwriters, intermediaries, if you will, without difficulty. But if you look at the geopolitical unrest that we have, that's reflected in oil production and the changes we see across the globe in oil production that's going on right now, that is manifested in the prices. Alaska still offers stability that's almost unique worldwide, and we have the infrastructure in place. It's all a fixed cost, and people do make investment in the Alaska oil patch and get a return, and that's very, very important that they continue to do that and have an outlook that they do that, and those are the fundamentals, and we can manage those, and this administration manages those very well. And so these commercial and investment banks, that it's almost a pile-on kind of mentality right now, where they all want to talk about they won't touch Arctic oil, or they won't invest in Arctic oil exploration or whatever. We need to push back against that, as Senator Sullivan and others, and certainly the governor, have been doing. But we can get along without them, frankly, easily, as well as they can get along without us. And they've made a poor choice here. So that's my synopsis.
All right, thanks, Tom. Another question here for Commissioner Mahoney. Lucinda, with regard to pension obligations, in the degree to which they're funded, what appropriation level would bring us to par for any of the funds that are underfunded at this point? And then could the investment performance of those assets be improved upon?
So I had mentioned when I was talking about the PERS and the TERS funds that the PERS pension was 76% funded. And so we would need to look at the actuarial data, which I don't have in front of me, that identifies the full amount needed to fund into the duration of the fund. So I could probably get that to you.
All right, thank you. And then I wanted to drop down to a question for President Johnsen. Jim, do you see any, you mentioned some of the opportunities that the universities kind of stepped into with regard to COVID response in terms of manufacturing PPE. Do you see any additional opportunities or leveraging that UA system could do with regard to facilities or research expertise, any other assets for additional response beyond what you've mentioned?
Yeah, it's a very good question, and I appreciate it. I think one top of mind is our labs. And to the extent social distancing and tracking or tracing and testing are going to be key conditions for opening our state, testing, I think, is critical. And we have 2 virology labs that are working very hard. We stepped in early on to try to provide some administrative support. Also, some of our faculty stepped in so that we could do more testing, particularly at the state virology lab that's on the University of Alaska Fairbanks campus. But I think we're looking at the possibility, I've got lawyers looking at regulatory issues right now, to look at, well, can we get our laboratories approved to expand testing capacity in the state? So we're talking regularly with other research universities across the country, learning from their experiences going through the regulatory process. And I think that's a major contribution that we could make, not only at this university, but we have lab capacity at our 3 universities across the state. So that could help those communities. So that's one example, I think, of a very important contribution we can make.
Okay, great. Commissioner Feige, a couple of questions for you. With regard to public use cabins, you mentioned that there'd be some future investment in those public use cabins. Is there any consideration for developing more of the hut-to-hut approach with public use cabins that's so common across Europe?
Very good question. Thank you. That is actually one of the models that the team has been looking into. Obviously in Alaska, you know, being able to do something like an Adirondack Trail where you go hut to hut to hut has a lot of appeal. We have to look at places across the state where that model will fit and work well, and where we can also balance that against, you know, maintenance and care of those facilities. But yes, that is a model that we're taking a look at, kind of trying to mix it up a little bit and determine where we're going to get the maximum user satisfaction and get the, you know, the return on the investment that we're making in those cabins.
Great. And another question is what is the outlook for road extensions to currently inaccessible or unconnected state land parcels?
Well, that one is a bit more complex question. I mean, additional road projects, part of the reason I believe that the Ambler Road project is so important is because that is a terrific blend of industry involvement to help pay through tolls for maintenance and upkeep on the road. There's access for local communities, et cetera. And we utilize the Red Dog, the DeLong Mountain corridor model, as well as the Pogo Road corridor as a model for those. DNR has, over the course of the last, I think this is our 3rd year now, been undertaking what's called the A-STAR project. And the A-STAR project is the strategic roads and transportation corridors looking specifically at the North Slope. And there's been a tremendous amount of engagement done with the North Slope communities and hearing from them about things like communication and fiber optics and other utilities that could be put in a roadway and actually connecting those communities. I think there were a couple of watershed moments in the last couple of years for the state that got everyone thinking about how isolated and disconnected a lot of our remote communities are. The first one, certainly for me, was the November 30th earthquake. And while that impacted South Central Alaska, and it was you know, Anchorage and the surrounds and the Mat-Su, if you stop and you think about, you know, something like that could happen someplace very remote. Barrow, for example, there could be some natural disaster. It could literally, if their airport is cut off and it's, you know, they're iced in, they're an isolated community. They can't necessarily communicate out, and they can't get supplies and assistance in or out. So even in a modern digital world, you still have to have some access and some connectivity there to have really safe, sustainable, secure communities. And in having discussions with Mayor Brower, North Slope Borough, and his team, and then others in the ICAST group up there, they now, after building snowpack roads for a couple of seasons and realizing the enormous cost savings to the folks in those communities, they are now very focused on how do we move forward with some sort of, through an A-STAR type of program or something similar to a DeLong Mountain or a Pogo Road, how do we move forward with an all-season road? If you marry that with the expansion going westward into NPRA, with oil and gas development. I think the pieces are all there to set us up for extension and expansion of roads going that way, that industry can help pay for and certainly pay to maintain, and not place that burden directly on the communities. And then I think that's a model that can be repeated in other places around the state. And I really think the time has come. We've at least got to do the background work and not be afraid of having the conversation that it's time for some critical infrastructure.
Great. Thank you so much. Well, we are a little bit over time, so I'm going to cut the questions short there. I apologize for not being able to get to all of them, but we've had a very meaty discussion today, and we appreciate all of our presenters, Commissioner Corri Feige, Commissioner Lucinda Mahoney, CEO and Executive Director for ADA, Tom Boutin, and UA President Jim Johnsen. Thank you all for your time today. And also thanks to Mead Treadwell for being our moderator and commentator on some of the other agencies that we just simply didn't have the time to include in our presentations today. So thank you all for your time and efforts. We also want to thank Northrim Bank for their support of the program and sponsorship, and encourage you all to look at commonwealthnorth.org for future programs and events. Our next monthly program will be May 27th. We're finalizing that program before we are able to make an announcement on it, but we'll be back again next month with an additional